Hello friends, welcome to my YouTube channel. Today's session would be on mutual funds. Now, many of you may have heard about mutual funds because it's the buzzword nowadays, right? But you're not sure that should I invest in mutual funds? You may have a lot of questions. Are mutual funds safe? Which mutual fund should I invest in? Do they give a high rate of return? Are they the best form of investment? How much money should I invest in mutual funds? Well, look no further. Today I am going to talk to you all about mutual funds so that by the end of the session you will have a clear idea what mutual funds are and you can decide whether to invest in them or not. Now the first question is, what are mutual funds? Mutual fund is a professionally managed investment that pulls money from ordinary investors like you and me for a small fee so that we can meet our investment goals. The second question is, where does a mutual fund invest in? Mutual fund invests in a wide variety of investments. They can invest in stocks or bank FDs or bank securities and other investments. Now the question is, why should you invest in a mutual fund? Why not invest in traditional investments like bank FD or gold? Well, the reason is that there is a chance that if you invest in a mutual fund, you may get a higher rate of return with minimized risk. And that leads me to the next question, that why not invest in stocks directly? Why pay fees to some professional money manager when I can invest in stocks directly? Well, stocks can be very risky for amateur investors or beginner investors like us. And as far as the cost goes, there is definitely cost involvement when you invest in stocks. You will have to open a demat account, then there are brokerage charges. So investing in stocks can also be expensive. The third reason that why you should invest in mutual funds is that mutual fund does not invest just in a bunch of stocks. It invests in a wide variety of stocks. This can lead to diversification of your portfolio and reduce the risk. As we all know that if you want to reduce risk, diversify your portfolio. For example, let us look at a mutual fund, HDFC Balanced Fund. You can check out on my screen. I have opened it up. Just look that in which stocks or investments this fund is invested in. They have invested in State Bank of India, ICICI Bank Limited, Axis Bank, Lupin Limited, Hindustan Petroleum Corporation, NHPC, CES Limited, Great Eastern Shipping. I think there must be more than 70 to 80 different investments. So just imagine, can you invest in so many stocks directly? Yes, you can, but you will need a huge amount of investment. You can get started on this investment by just investing, I think maybe 1,000 or 2,000 rupees. So you are getting the benefit of good rate of return with minimized risk at a very low cost. So I think this is simply amazing. Now we have already talked about how mutual funds are safe because of their huge diversification. Let us also look at the rate of returns because that is also very important. How much return are you getting on your money? Let us take a sample fund. This is Mira Asset Emerging Blue Chip Funds, which invests in blue chip stocks. Now, as you can see that I have opened up the page on money control. The 1 month return is negative, it's minus 1.3%. Let us look at the 3 month return. It is 3.5%. Quite good. 1%, approximately 1% a month. Look at the 6 month return. It's 28.99%. Let us look at the 1 year return. It's 64.34%. Yes, of course, it is a little bit higher, mainly because that we last year the market had dropped down and now it has recovered, so the rate of return will be a little bit higher. Let us look at the 2 year return. It's 19.77%. Let us look at the 5 year return. My god, it's 19.95%, almost 20% return. That's huge. 20% return. I mean, you can get your money doubled in approximately 3 years. And let us look at the net rate of return. This is a very good, I would say this is a very good mutual fund. It's 20.83%. Wow, amazing. Now let us look at this. That if you're invested 10,000 in this fund for 1 week, you would have got approximately 10,055 rupees for 1 month. Yes, so we had a negative rate of return. For 1 year, you would have got 16,478. That's good money. If you had invested this money for 5 years, you would have got 24,856. That's quite cool in my opinion. Now, let us compare it to traditional investments. Like, let us look at the fixed deposit rates of SBI. As you can see, if you keep your money in a fixed deposit for 1 year, it's only 4.4%. If you keep your money in the savings bank account in SBI, you would get only 2.75%. But the most important thing according to me is that by keeping your money in this fixed deposit and savings bank, you are actually incurring a huge loss. Do you know why? Because look at the rate of inflation in India. It has gone up to 5.52% in March. So if you invest your money in the savings bank and fixed deposit, your money is getting devalued. Your money will be much less after 1 year if you invest in savings bank and fixed deposits. So I think that it is definitely a smart choice to invest in mutual funds. Well, after listening to all this, I'm sure all of you must be excited to invest in mutual funds, right? But wait, which mutual fund should you invest in? According to a Paisa Bazaar report, there are more than 2,500 mutual funds today in the market. So, which fund to choose? You can easily get confused. I'll just tell you that there are just three main categories of mutual funds, which all of the mutual funds can be more or less classified into these three categories. First is an equity fund, second is a debt fund, and finally you have the hybrid fund. Now, what are all of these funds? Equity fund mainly invests, majority of the money is invested in stocks or shares. Debt funds, they invest in much safer investments like bonds or government securities or money market. And finally, you have the hybrid fund. Hybrid fund is a mixture of both the equity fund as well as the debt fund. So it will give you the best of both worlds. It will give you higher rate of return as well as increased security. Okay, now that we know about the main three kinds of funds, let us talk about the risk as well as return of these three primary classification of funds. Let us begin with the equity funds. I've got here a list of some equity funds. As you can see, if you look at the 5-year return of TSP Natural Resource and New Energy Fund, it's 19.52%. Then we have the Bank of India AXA Tax Fund, it's 18.16%. Then we have this Axis Focus 25 Fund, it's 17.61%. IIFL Focused Equity Fund, Direct Plan Growth, 18.59%. So I think all of you can appreciate that this category is giving a very high rate of return. That's simply amazing, right? Now, let us look at the hybrid funds, which invests both in equities as well as in safer investments. Like if you look at the DSP Equity and Bond Fund, Direct Plan Growth, it's got a 5-year return of 13.96%. Then we have got Canara Robeco Equity Hybrid Fund, it's 14.69%. We have Shri Ram Hybrid Equity Fund, Direct Plan Growth at 10.79%. Then we have got L&T Hybrid Equity Fund at 11.48%. As you can see, most of them are averaging about 12 to 13% return, which is quite good. In fact, it's very good, I would say. Now let us look at the return of the third category of mutual fund, which is the debt fund. As you can see, the banking and PSU fund, DSP banking and PSU debt fund, it's 8.25%. L&T banking and PSU debt fund is 8.37%. Credit HDFC Credit Risk Debt Fund, it's 8.86%. More or less, all of them are returning at about 8 to 9%, which is again not bad. At least they are much higher than your traditional bank FDs and your savings account, right? Now let us also look at the risk of this three category of funds. I've taken an equity fund, the IIFL Focused Equity Fund. So you can see the graph, the 5-year chart. You see there, the fund has been going up. It has not got a very smooth path. And then it has gone up. It has gone down. Here it had a massive down. And then it has again gone up. The important thing to notice is that even though the journey has not been very smooth, but it has consistently gone up. Now let us look at a hybrid fund. I've taken Canara Robeco Equity Hybrid Fund. Let us look at the chart. So even though it has got a decent rate of return, 14 points, I think it's not decent, it's very good. It has again got its share of ups and downs, right? You can see that here it has gone quite down and it has gone up again with a decent rate of return, but risk is definitely there. Now let us finally look at a debt fund. Wow, just look at that, 8.37%, but almost at a flat slope. So very little risk in this kind of fund. So friends, we have come to the end of the session. I think you have got a pretty good idea about mutual funds after watching this video. So you can now decide whether you want to invest in mutual funds, and if you want to invest in mutual funds, please sit with your financial advisor and make a very educated decision. If you have any questions, please drop down your comments below. You can ask your questions out there, and please hit subscribe to my channel. I will be coming back with another video very soon. Thank you. Have a good day.